keep up his tradition of making a new high, all-time high, closing high on Friday? Well, we're off to a pretty good start. SMCI, the one-way trade, good earnings and bad earnings on this Friday to cover. Coinbase wild. Triple D will give us details on that. As I said, PPI at 8:30, CC Lagator at 8:35. Wrapping up another week here on Pre-Market Prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Follow through on that strong close, up 8 handles, 505450. Only one number on the upside, that all-time high at 5066.50. The buck flat at 104.20. Bonds down a little bit than a half a point at 118.5. Crude in the red by 66 cents, 76.93. Gold in the green by 360 at 2018.50 cents. Silver just above 23, up almost a dime at 23.04. Bitcoin continues its relentless march higher, up $780 at 52,735. Let's bring in Triple D after a wild after-hours session, and AB, who is now on a 2-day work streak. Hey, AB, how you doing?
Never thought you'd see that happen, huh?
You talk about streaks.
I'm the only one that doesn't take days off here. I never take days off.
You did.
Well, when I'm sick and dead.
Yeah, that is a good excuse for you to miss the show if you're dead. But man, was your head on a swivel last night or what?
It's the same swivel we continue to get. So it's the NVIDIA and SMCI story. Last night, Loop comes out with the buy rating on NVIDIA. That came out just slightly after the bell. $1,200 price target on the puppy. And the stock started going up. And you know, when NVIDIA starts going up, you know SMCI is going up. You also know when NVIDIA starts going up, that IWM is going to start going down because it's IWM versus NVIDIA. That's the new pair that you can see. Yesterday, NVIDIA having a little bit of a quiet day. Down in the day, IWM ripping. Well, NVIDIA going up here today, they're like, well, if we're buying NVIDIA, we can't be buying IWM. We better sell that thing. Now, that might change with the PPI that's coming in a few minutes, but let's just go to the SMCI before we do the NVIDIA technicals because this might be the most one-sided trade that I've ever seen in my 25-year professional career of trading. 25 years I've been trading professionally here. This is my 25th year. And I've never seen, I think, a trade this one-sided. Even with GME, it had the odd down day. Like this thing goes up, just now goes up 100 points every day. Every day. And you know what? I couldn't take it anymore, and I finally sold out of the rest of it yesterday because I'm like, this is just insane. I'm like, it's too much, too fast. It's due for a pullback. Immediately regret that sale again because you know what? The next day we just tack on another 71 points here. It's an unbelievable stock. And then, you know, there's people talking, and it's a good point. I'm going to make this one more point, and then I'll let you guys talk. We're run on sentence here, as I always do. The S&P rebalances next month. Is there the possibility or even probability that SMCI might get added to the S&P? I mean, the market cap is climbing rapidly here. It's profitable. SMCI, this could be, you know, added to the S&P next month, and there's more fuel for the fire. So this fire just doesn't want to go out. Unbelievable. Congratulations, everybody who's been holding it this long. I did ring the register because when you get 700 points in 6 weeks, it's time to ring the register. But now it's 800 points, so I don't know what to say. Maybe you just continue to hold.
9-day winning streak, higher highs, higher lows, higher closes. 9-day winning streak. Also make that 11 of 12 if you want to, or excuse me, 10 out of 11 if you want to tack that on. I made the font a little bit bigger for you. You know what? We could talk about this a lot, but we're going to have CC come on, and he's going to talk about the NVIDIA earnings and potential plays in that. So Not trying to pick a top yet in it, but holy mac, I'll just give you your pre-market high. Comes in at 1078. And then the other thing I just wanted to mention is the volume. Look at the volume going up like this. This is, wow. Man, there's going to be some bag holders or non-bag holders because big increase in volume in SMCI.
I don't know what to say. Like, I'm at the point where it's jaw-dropping action. I was in the thing for a long time. This is the first time I actually feel, crappy that it's going up because I sold. I guess I shouldn't have sold any of it, but I mean, I sold it in 3 tranches. The thing over doubled in basically 4 weeks. And I'm like, well, if I sell a piece, then, obviously I'm getting to the point of playing with house's money. And then I sold another piece, and then I'm completely playing with house's money. I sold the last piece. So I believe I sold around 560, I want to say, 780, and then 940 or something yesterday after the open, and obviously continued to run after that. But I'm like, holy, this is just unbelievable. So anyways, congratulations on all the longs. I hope some people are still long it. A lot of people reaching out that they are still long it. I don't know where the ride ends, Joel. It's impossible.
I think it doesn't feel like to me out of the last, few years when we've seen some of the crazy rallies, whether you're talking about AMC, GameStop, Dogecoin, etc. It doesn't feel like that to me. This one is as retail driven. Like I haven't seen as many people on, Twitter or Wall Street Bets, you name it, just out buying it for no reason. I wonder almost how much of the money flowing in at this point is institutional. I mean, you saw the crazy move in ARM. And after ARM reported and it went up, 50% in a couple days, that was a lot of institutions buying there. So, I mean, just with SMCI, a lot of people have been calling it top. They've been wrong. I have no doubt that more people today will be coming in calling it top at SMCI at 1100 or whatever it gets to this morning. And we'll see if it does end up moving lower. At some point, it has to, right? I mean, at some point, we have to get a pullback.
You'd think so, but so give us some stats on it, Joel. You were doing the stats and you were calculating it. Give us the stats for the recent run in the last.
This is the only thing I can. This is the only thing I can show you is, and I'll just go to the daily here. I mean, 1, 2, 3, 4, 5, 6, 7, 8, 9 up days in a row. One day, 9 of 10. Right, so you're going, add 2 more is 12. 11 out of 12 up days. It's doubled in the volumes increasing. I don't even. I mean, we just got to wait. There's no consolidation. There's no pause. There's no pause in the action yet. The only thing I would say, I know Nvidia earnings are next week, but we'll talk some setups with CCNS. We got some earnings from today. Let's get to them, Aaron.
All right, first one up, since we're already talking about chips, let's go to Applied Materials, ticker AMAT. AMAT reported after the close last night and raised guidance. I mean, let's put it this way. If you're in this space at all, the semiconductor space, which Applied Materials is, they do the wafer fabrication equipment, so kind of like almost a pick and shovel play for the semiconductors, doing some of that production there. If you're in that space and you're not raising guidance right now, then something is wrong. EPS came in at 179 and 215 against the 179 estimate, 213 I'm seeing here. Beats by 22 cents. Revenue of 6.71 billion, beat by 220 million, and then again gave some strong guidance. Where are we trading this morning? Because last time I checked, we were up about 11%.
That's where we're at now. That high's way up there. That reaction high at 217.39. I'll give you that as a potential target on the outside. And I'll say mild support at 204 after you had the dip. But uncharted territory here for AMAT. Straight up. No dip on this one, right, Dennis?
I don't know, Joel. This is the market where stuff, once it gets rolling, you don't be shorting all-time highs in this market. I'll tell you that much there. And the stock is trading at an all-time high. I didn't go out to like my 50-year chart here, so I'm assuming it wasn't higher during the burst.
Don't worry about that.
Yeah, so we're way above. I mean, stock's at all-time highs. It's chips. Everybody wants chips. I like chips, so dip and everything too. It's impossible when they're making new all-time highs. It's very hard to call a top.
And you did have
gapped up 21 points, so I'm not going to chase it up 11% here. This is not SMCI. So I'm just out. I wouldn't even make a trade on this one.
Okay.
You did have some analysts coming in this morning. Looks like someone from Needham came in and raised its price target for AMAT from 180 to 240. So that's kind of been the story with all these chip stocks. They come in, they give strong numbers, raise guidance. Then the analysts say, oh, yeah, by the way, our price target's way up there for it. Dennis mentioned how yesterday, B of A Securities came out on SMCI, gave it a price target, hit it in the very same day.
Well, we left SMCI so fast. It's such an exciting stock to talk about, obviously, because we picked it on the show. So it's fun. But I don't think I've ever seen that before. An analyst comes out with a price target, throws it, 15% above where the closing price is, and the stock hits it the next day. So the stock was 900 or 890. Where was it? Let's go look exactly. SMCI, where it closed the previous day, was $880. Bank of America analyst comes out and puts a 1040 price target on it, and it hits it 36 hours later. Those are 12-month price targets, folks. That's a 12-month price target. It hit it in a day and a half. This is the most incredible thing to watch. Like, it was impressive. The GameStop was fun and all that, but to your point, Aaron, and we're coming back to this just because it's such an exciting story, you made a great point. This is not a meme stock. This is not, retail driven here. This was actually driven by fundamentals, and now it's just the algos got it and they won't let go. And I don't know, like everybody keeps trying to call a top on this thing. I've sold some stock, which is basically essential of trying to call a top, and it just doesn't work. I mean, it's unbelievable the strength in this. And again, maybe this is desperation because we don't have a lot of AI stocks, like pure, and they're looking at this as more pure play. Obviously there's the two. And do you know what the highest dollar volume traded stocks in the entire US markets were yesterday by dollar volume? So
SMCI and NVIDIA.
Yep. NVIDIA was number one and SMCI was number two. That's unbelievable. Dollar volume. So, you think about all the Apples and the Microsofts, they trade stocks like crazy. No, the $2 volumes were NVIDIA and SMCI. And doesn't that just sum up this market? That this market is the AI market. It's been driven by AI. Everything, else that's non-tech has been left in the dust. You could say, oh, what are you talking about, Dennis? IWM's had a really good 3 days. Yeah, but in the last month and a half, it's up nothing. Some people are saying SMCI is the biggest thing in the IWM, and that's driving the IWM. This is true that it is the biggest component of the IWM because the IWM hasn't reweighted yet, but it's not true that it's driving the IWM because in the last 7-8 days, let's go back to, to disprove this theory. February 1st, let's just go January 31st, IWM was 198. It's 204. So IWM is literally up 2% in the last 12 trading days. SMCI in that same time frame has went from $470 to $1,070. So you can see clearly, no, not the case. IWM not being driven. Today, proof and point. SMCI is trading down. SMCI is trading up 66 points. IWM is trading down. So the other stuff just overweights it. So don't think that I buy IWM, I'm getting a huge exposure to SMCI. I believe it's still 2%? It's pretty small. They will reweight this thing. But the interesting argument is, again, if you're talking about reweightings, is that the SMCI could very likely go into the S&P at the end of next month.
I'm just going to go on IWM here, and man, we keep knocking up here against the monthly resistance, which coincides with the 50% retracement here. I mean, this thing is, revving its jets. Everyone complains about the breath and everything. I don't think interest rates are going anywhere, so I don't think that's going to be a big boon to it. But, you have to respect the 50% retracement. You have to respect the monthly highs here. On the verge of a breakout again. But if you've been saying that since early 2022, you've been stuffed every time. But once again, getting a running start at that major resistance, IWM, on the verge of a multi-year breakout.
And IWM is going to move violently in 15 minutes when we get the PPI. It's going to be that moves the most because, obviously it's those stocks which we've talked about before that need the interest rate cuts. NVIDIA doesn't need an interest rate cut. It's flying no matter what. A lot of components in the IWM want the rates lower. So keep an eye on the IWM. It is going to move with the TLT a hell of a lot more than it's going to move with SMCI. So don't fool yourself. IWM is not SMCI driven. It is still TLT driven. TLT bouncing back last couple days, helping IWM a little bit here. There has been a decoupling. We're in this buy stocks no matter what. You know, the dip was bought in the IWM. And I do think we're in a bull market. And I do like that the breadth is expanding. I do like that you're seeing more stocks, non-AI stocks, start to lift here. That's all good news. But really, when you look at this market here, it's still technology driving the bus.
And just real quick before we move on to Coinbase's earnings from SMCI, I did see this on Twitter. This is from the I don't know if I'm going to say this right. The Kobesi letter. So
Bluefield Hills, Michigan product. I just want to announce
they do great
that.
stuff. I follow that. That's really
He's
good.
he went to Bluefield Hill. He's from my area. I've tried to get him on the show. He hasn't reached.
Who's the person that runs that?
His name is Adam Kobesi.
Kobesi. Okay, so Kobesi letter.
If anybody knows him, I reached out once to come on the show. I didn't get a response. So if anybody knows him, send me an email, joel@benzinga.com.
So wait,
what's he saying? What was he saying?
Adam Kobesi. So before I pull it up, because I want to ask you guys this little trivia question. So he said that the RSI, the Relative Strength Index, which I don't really look at that much, reached above 97 on SMCI. And he said there's only been one other stock, I don't know if it was ever in the past decade, to get that high on the RSI. Do you guys know what it was?
GameStop?
Yep, GameStop. So let's look at this real quick from, again, this is from
That's the
Adam
first
Kobesi.
thing. I didn't see it either. I just guessed, so I didn't actually.
So this is absolutely insane. The daily RSI on SMCI just closed the day at 97 as the stock pushed above a record $1,000 a share. There's only one company in history that has managed to mark a daily close with an RSI above 97. It was GameStop on January 27, 2021, the day before the stock peaked in the meme stock rally. Super Microcomputer has not had a single down day since February 2nd and is now up 252% in 2024. So, I mean, look, I don't know if he's calling a top here or saying, but last time the RSI got this high on a stock was GameStop, and then it sold off. But I was saying earlier that it doesn't feel necessarily this. I mean, you have at least some justification here, not justification for this move, but you do have the fundamental reasons and the justification for a violent move higher. This violent, no, probably not. But again, I mean, you know, I don't think we're going to see this thing completely round trip like we saw GameStop did and go all the way back down to where it was or around there. But you might, you know, see a pullback at some point. I don't know if that means it's going to pull back to 900, then people start buying it again, or maybe it pulls back to 800. But either way,
they'll be underneath demand. That's the problem here too. And to your point again, and we keep talking about it, this is fundamentally driven. They weren't prepared for this type of earnings growth out of this company. Now, is it overdone? Yeah. I mean, a 97 RSI sounds overdone to me, but I mean, it sounds like it's due for a pullback, but you know what? It's due for a pullback 3 days ago. It didn't pull back. It just kept going higher. So hard to call tops. Tops in this market, it's a tough business.
I was just pulling that up to show the RSI. I do not think this is GameStop all over again, right? This is completely different. That was the point I was trying to make
it's not
earlier.
A company that was on the verge of
bankruptcy. Let's move on from chip stocks to crypto stocks. Coinbase reported earnings last night after the close. Coinbase, I mean, this was a great report from Coinbase, actually, but the traders didn't really know what to do with it when the numbers came out. EPS came in at $1.04. The estimates were for 1 cent. So EPS came in at $1.04, beat by $1.03. Revenue came in at $953 million, beat by $134 million. I mean, I don't know why you wouldn't just look at how crypto has been trading in those 3 months that the company is reporting for and say, oh, well, if Bitcoin is up, 20%, people have been piling in, then obviously Coinbase's trading numbers should be a little bit higher. But either way, stock trading up now this morning about 15%. This comes after the stock closed up more than 10% a couple days ago. So at this point, Coinbase has had a pretty violent rally in its own the past week. There's no SMCI.
Let's give a perspective here. $114. This was a week and a half ago, and everybody hated this. It's 190 now. So just tacked on 75 points on 114. Just went up 70% in 1, 2, 3, 4, 5, 6, 7 days. 70% in 7 days. That's incredible. That's almost SMCI-like. This has been an incredible move here. You are coming up to some major resistance points here. I know we're trading through it in the pre-market. But you have that
Good
triple
point.
top up there at 187. Let's see
Yeah,
if it
good
can
call.
stay above there, because if it doesn't hold there, this could be one of those candidates to have a reversal. So you want it to hold. You're buying up at 190. Maybe this is the market that everything just continues. You don't want to see it go back down below 187.
Dennis, talk about this price action here and just after 4 o'clock. I pulled up the 1 minute, which we rarely do here, but holy mackerel. That's a 1 minute chart here, folks. This price action.
Something else.
Yeah. Pre-market.
Yeah, like so on the print, can you show just go
This
in
is
there
the 1
more?
minute.
Yeah, I know, but I'm still seeing the big move. Like, which one are you looking at? I'm 3 charts. I hate these 3
Left.
charts.
On the
Okay, blow that up to the whole screen so we can look at this closer, because I was like trying to trade this in here. It was incredible action. So we blow that up to the whole screen. Actually, I can you go even into like the 4 o'clock just after the bell?
It's right
'Cause
here.
this
Right
thing
here is
went
4 o'clock.
yeah,
Here's
okay.
4 o'clock.
Okay, so after 4, when the number hit, this thing went like 166 down to 155, up to 167, down to 155, up to 167, down to 156 again. It chopped up there 3 times 10 points, like banga, 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 just going like that, like crazy. After the second time, I was like, I'm trying to buy down there because it keeps chopping around there. And then she blasted off and then took off 170, 180, 190. That was later on. But the action off the bat, the algos sometimes just don't even know what to do with it. I mean, it was trading that 10-point range so fast. It's like the opening candle was at 10 points. Then the next candle was the same 10 points. So it was just going like this for the first like 4 minutes after the report. It was like they couldn't decide if they liked
Right
it or
here.
they didn't like it. It was absolutely incredible. It doesn't look like much on that candle that you're showing there, but that action in there was incredible. Algo's just gone wild on that.
I don't see how you would be selling that thing with that kind of a beat. I mean, were they waiting for some kind of adjustment or something? I mean, that was
I
a
can't.
monster beat. Why would
I'm
you
a
stand in
smart
front
man,
of
but I
something like
cannot
that?
comment on what's going in the mind of the algos. That's
All right, let's get back to
all right.
reality here.
Yeah.
And I like that number.
Good
The
growth
pre-market high is above that. And that was actually an after-hours high. So there's a target at 193. But I really like that number Dennis gave you, that 187 level, because that was a triple top going back. Now I got to get back to my dailies here. But congratulations, you're owning Coinbase here, trading up nearly $25. That's 15%.
All right, and then let's get back to we had some more earnings coming in after the close yesterday. A little tale of two markets going over to the downside. DraftKings, ticker DKNG, reported. Yeah, let me pull up the numbers real quick.
Whoa, this thing's all over the place.
Is it? Are we up this
same
morning?
thing. It was nuts. It was nuts. Go.
Sorry, man.
You're good. You're good. So last night, DraftKings reported EPS of 29 cents, beat by 11 cents, revenue of 1.23 billion, missed by 10 million. DraftKings raises 2024 guidance midpoint to 4.75 billion versus 4.69 billion estimate. Raised adjusted EBITDA guidance midpoint to 460 million. So I think the numbers were okay. I think the expectations, I mean, if you look how the stock was trading into the report, it's been up a bunch the past couple months. So maybe the bar was just set a little too high for DraftKings. Because again, those numbers were fine. The stock traded down a little bit after, but looks like we've been bouncing around. What are you guys seeing on this?
It was crazy on the report, and the initial headlines was missed on the adjustments, not on the pro, but I saw multiple, even CNBC saying, that they lost money and they were expected to make money. So they came on, and CNBC was saying that like it was a big mess. And then I tweeted it out, and I actually deleted the tweet after because it was wrong. I thought it was a miss as well. So I think on the initial numbers, they were coming with the unadjusted EPS, and we saw an 8-cent loss, and we're like, whoa. What's going on? The algo saw that too, and that's why we traded violently down. Benzinga, tweeted at me afterwards and say, no, there's an adjustment there. Thank you, Benzinga. And, the bet cooler heads prevailed. But on the initial numbers, CNBC said it twice as well. It looked like it was the miss, but I missed the adjustment, and a lot of other people missed the adjustment too. And that's why we traded so violently down off the hop, because they expected to make 8 cents and they lost money. They're like, whoa, this was supposed to be a huge quarter. What's going on? That's why, the algos got fooled by that unadjusted number.
I'm going to throw out the high. I'm going to throw out the low. and just like a figure skating competition. And I'm gonna get. I mean, just look at the price action from yesterday. 44.46. You're closing high for the move. You probably have a seller staked at 45 that didn't get done in the after hours. So let's let the street make the judgment here. If it's a good day, you get green, you take out 45 bid, then greener pasture ahead. If somehow you struggle here, you can't get green or you can't get over the 45, maybe you finally get some profit taking here in DraftKings. Tale of two markets here. Penn, bad day yesterday, up only 7 cents today.
Yeah, and again, I talked about this yesterday real quick, just if you're on these apps at all, I mean, which we talked about how Penn has a lot more exposure to the physical casinos and horse tracks and whatnot too, but the ESPN Bet app is just not on par whatsoever with either DraftKings product or FanDuel's product, which is now trading publicly as well under Flutter. Ticker FLUT. I don't know if we've taken a look at that stock yet, but either way, I mean, if you wanted to play in this gambling space right now and like you like this industry, you think it's going to keep growing, I don't know why you would pick Penn over those other two
It's
names.
just a disaster. Penn, and again, I had this in the long-term portfolio for a long time. Sometimes, like I said yesterday, you just got to eat the losses, and so you don't get fleas because this is a dog, man. This is the dog of dogs, the worst. I mean, casinos are bouncing back. Online gaming's been doing awesome. And you have Penn that just cannot, even catch a bid whatsoever. The stock performance has been atrocious in this stock. Worst of breed, Penn.
And I tried to give it a shot. I mean, they offered some like, oh, if you download ESPN Bet, you get all these free bets. And I downloaded it and tried to give it a shot. Did not. I mean, the layout is just it's like imagine if you were using like Facebook's website from 2010 versus its website from today. It's like it feels like you're using an archaic app versus the other ones, which are actually a pretty good layout. But all right, we got time for one more earnings before we've got some economic data.
And I'm going to go to the background too on this number.
Yep. So in 2 minutes now, we'll have PPI coming out. I'll have those numbers for you, but we have time, I think, to run through Dash. We'll dash through Dash. Let's dash through Dash real quick. DoorDash reported after the close yesterday. EPS missed by $1.51, came in at negative $1.65. Revenue of $2.3 billion, beat by $50 million. Let's see. It says, yeah, I mean, I don't know if they gave any
weather.
guidance.
They blamed it on the weather. The weather was. Why are you laughing? They did.
It's funny. They blame it on the weather. Remember, we were in that earnings season. I don't remember which one it was. Like, it was a couple of years ago, and every company was coming out and blaming it on the weather. If you can't figure out a reason why we're not making money, we better blame it on the weather.
Yeah, they said it.
The weather's been good. What are they talking about?
I
It's been
don't
the most
know.
mild winter ever. How is this bad? How has the weather been bad? Where are they? They're everywhere.
The board
it was 55 degrees in Georgian Bay, which is usually 20 below at this time of year last week. The weather's been awesome. How in the hell is that possible? I guess maybe they only DoorDash. They want bad weather because then people don't want to go out and get the food. Is that what it is?
Yeah, but then they have trouble getting drivers.
Oh, gosh.
Yeah.
Either way.
Jay Rice making a good point in the chat.
Down.
Jay Rice making a good point in the chat that this did run up into the earnings report, so maybe the expectations were a little high. The board did. DoorDash's board looks like authorized a share repurchase, so doing a little bit of buybacks, and it did get a buy rating this morning from Oppenheimer. So maybe some of the analysts are going through this report and saying it's not all that bad, but again, this thing got shellacked after the report, still trading down more than 7.5% this morning. But real quick, Joel, we've got
PPI coming up. I don't have time to give you levels of DoorDash and Phil Gap at 118.5. PPI. Let's see if we get CPI traded up 5.5. Hot again. Hot.
Well, hold on.
Yeah, it's hot. It's hotter than expected.
Waiting. All right. PPI came in at 0.3% versus so 0.3 versus 0.1 estimate. Let's see as we wait for these kind of. All right. So USA core PPI for January came in at 2% versus 1.6 estimate, 1.8% prior. So it went from 1.8% in December. It was expected to drop 0.2% to 1.6%. Instead, it went up 0.2% to 2% for January. PPI year over year came in at 0.9% versus 0.6. So yeah, hot across the board. But I'm only seeing that. I mean, the market hasn't gone down too much yet.
No, you know what's really interesting here is that we haven't taken out that.
IWM slaughtered.
Oh, let me see. I didn't.
That was the quick pop in and pop out from Dennis.
Resistance is resistance at that. But folks, what we're looking at here is you haven't taken out the pre-market low. Now, going into the CPI, we were red, and then they just slaughtered it, and they had no problem taking out the pre-market low. Here at the elevated level, we're still holding that, but it feels like it's shaking. That pre-market low is 39.25. We got buyers stepping up here at 50-40. I don't know if people just get a short ahead of the number and just saying, hey, I'm not waiting for this to go super red. But that's what I'm seeing. 39.25. That's your pre-market low. We'll see. Oh, there it's shaking. The bears are coming in. They're saying, yeah, we got to make a new low on this one, but still running into some bids here. And while the CPI was worse by 1/10, this is worse by 0.2, and excluding food and energy, that's up 0.4. So I don't know. They say the CPI is more important. Well, you got the reaction. Bulls making a stand here at 50-40. Let's see if it can continue.
I really don't understand because all the economists that I've talked to in the past few months, and I forget who we had on the show, but we were talking about the Truflation reading, which is like a third-party real-time reading of inflation, and then the Truflation says it's below 2%. Everyone I've been talking to, Joel, keeps saying inflation's actually lower than what the government's reporting. It's just going to take a while to see it, but then we keep getting these reports that are hotter and hotter and hotter. So I don't know. I mean, maybe either they're wrong, either the numbers are wrong, or something. But again, too hot economic data points this week. Of course, CPI on Tuesday, which really brought us. I mean, we got hit hard on Tuesday, but it doesn't feel like it because the very next day, bulls just came back and bought everything up, and we made back all those gains. We'll see if bulls can make a stand today, bring us back at all.
Hanging out here for quite a long time. You just reminded me when you said "Too Hot to Handle." That was a great UFO song from a long. Your parents probably don't even remember that one. But we're shaking. We just made a new pre-market low, so there you go. But still, the bulls are pesky here. Not much. If you're looking to lean on daily lows here, you don't have a lot. Thursday's Globex low is way down at 40.11 or 50.11. What am I saying? 40. I'm looking because we're trading 50-40 here, but 30 handles lower to the next daily low for the S&Ps. Let's look at some stocks here. We'll go to IWM first. Resistance is resistance until it's taken out. So we're taking now. Let's get to the boom, boom, boom. There we go. Well, more sellers coming in here. It looks like we're not going to be getting back to
AMAT getting hit. Man, this is bad for me. I had some. I bought some calls on this before the close yesterday. I thought I was going to be up big this morning when it was at 212, but now we're back down to 205. We'll see if people come in.
How far did you do the weekly?
Yeah, but they expired today.
And what, the 200 or something like that?
215. They were like 20. They were like 22 cents, and they were set to open at. I was doing the math on it. They were set to open at. I got them for 27 cents, and they were set to open at like $2.50. But those are probably weighed back down now to I might still make a little bit money on them, but I thought it was going to be a big winner. Now,
yeah, man, you give yourself a little bit more time on that, but
well, I was like, hey, this is in the chip space. I mean, come on, I thought this was going to be
chips. Well, it's a good call, boy. Oh, sorry. Well, we'll see what happens here.
No, I mean it's nothing to be sorry about.
Let's see what are these other stocks doing off this SMCI. There you go. Now it's only up $56. Let's look at some of the other hot rods. Nvidia.
Right. None of that you have to worry about, Joel. So we're just going to clarify here. All that stuff doesn't care. SMCI, Applied Materials, they don't care about this. They're going to come in a little bit. What cares about this is everything that is interest rate sensitive. So go start looking at the IWM. I mean, it's down 1.2%. It just dropped $2.50. So I mean, you got to look at the small cap banks.
Yeah, look at up
small cap stocks just going to start getting hammered here. Airlines has turned red. Home builders going red. All that stuff. That's what cares. Nvidia, is a flight to safety on a number like this. Don't be surprised if NVIDIA actually can rally on a number like this. So I just want to because people just think, oh, all stock's going to sell. It's a separation here. Tech had a bad day yesterday because the IWM was having a good day. So you're just getting this separation here happening where it's the tale of two markets. One market needs lower rates. The other market doesn't need lower rates. So clearly, you can see, what is getting hammered here on this. S&P is holding up. The QQQs are green still on this. It's telling you tech is okay. For higher rates for longer, tech's okay with that. It's not, the IWM is not okay with that. TLT, which is always your lie detector test, trying to make new lows on the move here. Not quite, I guess, down to there. 92.23 or 92.45. But just keep an eye. Clearly, you can see where the weakness is. And the weakness is clearly in IWM.
Yep. All right. Well, it is 8:36. Time to get to our guest of the day. We're bringing on CC Lagator from Options AI. Without further ado, let's give CC our special pre-market prep intro, and we're going to talk about options expiration when we come back. All right, CC, welcome back to Benzinga's pre-market prep. How are you doing this morning?
Great, good. Great to see you guys.
Great to have you
Can you
on
hear
as
me?
well. Yeah,
Yep.
of course. So,
Cool.
give us a rundown. What are you seeing? I mean, it's been a crazy market this week. You've seen, a bunch of wild moves in the chip stocks, NVIDIA, SMCI, you name it. We've got options expiration today. What are you watching?
Yeah, it's interesting because the last couple of times I was on the show, we talked about the potential. We were at very low vol levels. We sort of talked about the potential of what could take us out of those kind of doldrums, and that doldrums turned into slow grind higher. And now we're at this point where we actually are seeing volatility. And it was always the case that that volatility could have been from one of two things. People have not been at all interested in buying puts. They have not been interested in any sort of protection. It's been a buy the dip mentality for months now. And where the other place that you sometimes see volatility in those kinds of conditions is, whatever you want to call it, like a blow off top or I think the last time I was on the show, I was saying, there's the potential for a mini meme stock era coming up, right? And where that volatility comes from is people buying upside calls. And, you all have been covering exactly what's going on in this market. It's the SMCIs, it's the ARMs, it's the, even you look at some of these earnings moves like Palantir. I mean, these are crazy, crazy moves to the upside, right? And what that is yesterday the markets were up yesterday. And if you looked, the VIX was up, right? And that is a sign a lot of times of people reaching for upside calls. Now, we had earlier in the week with the CPI reaction, that was the first time in a while we saw any sort of fear, and people did start buying downside puts for protection, but it obviously only lasted about a day. And even that closed, with a rip higher into the close that day. So for now, it looks like the volatility is not necessarily in the market, and it's not necessarily like in the big mega cap companies or the indices. It's in these individual names that in a low vol environment, people are buying upside calls and creating little sort of gamma, not even little, massive gamma pockets to the upside, allowing these stocks just to go crazy to the upside.
So you think these some of the moves we've seen obviously have been, in SMCI specifically, but, NVIDIA, ARM, how much of it is options driven?
Well, so the options thing is interesting. So I always want to be careful because I'm on here to talk options. And
Right.
I think a lot of times when you hear options people speak, they're speaking from, it's like the blind man and the elephant, right? So the options thing is most often the tail, the dog wagging the tail, right? But it provides this backdrop where sometimes the tail wags the dog, where it can, for instance, today, we had that move this week, and this is a good opportunity to talk about sort of expiration and what might happen today, is we had that move on CPI earlier this week, and the market tanked, and it looked as ugly as it's looked in months, right? And then it found buyers at the end of the day, and then it sort of ripped back. And now where do we find ourselves? We find ourselves at 5,000 essentially, right? And so from an options perspective, options couldn't have predicted what the CPI print was going to be. They couldn't have predicted what the reaction of investors was going to be to that print. But, and it might help explain maybe what we're seeing in the PPI reaction, if it's still muted, is we were coming into an expiration week. And that meant that going into CPI, there was a lot of stock being sold above SPX 5,000, SPY 500, those levels, right? And those are big gamma levels where there's a lot of open interest in the options market. So all that stock that got sold, next thing you know, we're down 2.5% over those 48 hours. That's a lot of stock that now needs to be bought that got sold above 5,000, and that's gamma, right? You sell it, and then the market goes down, and then now you have stock to buy against your long gamma, your puts, essentially. And that reaction back to 5,000 makes perfect sense from an options standpoint. It might not have made perfect sense to the market standpoint. It was kind of curious, right? Now, the interesting thing is today is expiration. That 5,000 gamma clears out, right? So that kind of volatility that we saw this week on Tuesday, and that downward, and then the snapback, and some of this insane action we're seeing in some of the individual names to the upside, it may actually get crazier next week, right? And this may clear out, and it sort of like unchokes the market a little bit. And that next week after monthly expiration tends to be quite volatile. And not necessarily, it's not guaranteed to happen, but the market can have the room to move next week in a way that it didn't this week, which is weird because it did move a lot this week. So I would expect to potentially see some craziness next week.
I mean, taking just a single stock like SMCI, for example, I mean, I assume going into this month that the stock didn't even have monthly's strike prices where it's at
totally.
right now. So now that next month it will, I mean, do you think increase? Is that part of almost the problem with SMCI is that you didn't have, I guess, the opportunity for options traders to be kind of trading it like that on both sides because it was so one-sided. We didn't have $1,000 strikes on it, and now that we will, maybe will you have a little bit more reasonable market, I guess trading activity?
Well, the funny thing is, if you go back, and I don't know if I want to compare this. The last couple of times I was on, I was saying there was a potential for a mini meme stock era. I agree with what you all were saying earlier in the show, which is this feels slightly different. Like
there's similarities, but it does feel different. There might be similarities.
The
price action.
The companies feel different, right?
Right.
Like this is like AI is real, chip making is real. It feels like somewhere in between, meme stock, or remember like the 3D printing craze.
Yeah.
Joel probably remembers that. But it feels sort of maybe closer to like the early .com stuff, where it was like real stocks going up early in the .com. It was the pets.com and all down at the end of that cycle, right? But anyway, going to your point, it's really interesting with SMCI is, if you remember in the actual meme stock era in GameStop and AMC and all, they would run out of strikes and the stock would stop at that point, right? So if GameStop was 50 and it went to 100 that day, and the 100 would be the top strike available, the stock would just stop at 100. And the reason for that was because that short squeeze to the upside actually needed those short option strikes all the way up to like fly, like it would be like flinging it through there, right? And it would
that's the tail wagging.
That was definitely the tail. And so it's interesting. I haven't looked at like how quickly they're adding strikes in SMCI, but it would be interesting to see if it's stopping basically where it ran out of option strikes. I hadn't thought of that. I'm going to look at that this morning.
Yeah, I'm sure the market makers are adding strikes very quickly because it's getting a lot of volume.
But a lot of times, like if you're on your trading platform, you might not see them for 2 days. Like it is a really archaic system of like adding strikes, getting them on the exchanges, getting them into the data providers. Like it is kind of wild. And but yeah, so what I'm explaining there is you take a retail frenzy and an institutional frenzy. And I think there's a lot of institutions involved in some of this stuff, right? Clearly that ARM thing, I mean, that seems some like inside cooking or what, like there. So that seemed like a short squeeze to me. That was more like a GameStop or whatever. But the SMCI is like, feels like actual buyers. They don't want to miss out. At some point it reverses. What were you all saying? It's like 9-10 straight up days. So
I think 9th right now, yeah.
At some
And
point,
even on Tuesday when everything else was down, I think the Qs were tech kind of got crushed the hardest on Tuesday from what I saw, and still SMCI finished the day up somehow. So I'm looking at it right now. The monthlies in March 15th. Looks like they have right now strikes up to 1,500 on my brokerage for SMCI. So they must have gotten.
No, what's wild is I was looking yesterday. If like we talk about expected moves and things like that. If you go out to, I think the farthest out options right now are next January. If you go out there, options are pricing, I think about a $700 move. So the farthest out options right now are pricing the stock either to go back to 300 or go up to, practically 2,000.
Well, there you go. Speaking of, stocks with big expected moves, we have NVIDIA set to report earnings next week. I don't know. This might be the most anticipated earnings report. So definitely so far of the year, but I can't remember another time in the last few years that we've had a earnings report that's going to have.
Let's do a setup here, Aaron. Let's CC. Thanks for coming on today. Let's do a couple scenarios here. Let's say you're long. Let's say you're long 100 shares of NVIDIA. You bought the breakout at 500, and you haven't done anything with it. You don't want to do any. You don't want to sell the stock. Give us a setup here. And I'm not talking about using the weeklies. Go a little bit longer. If you were long 100 shares of NVIDIA at $500 going into this report, what would be, this is not investment advice. This is just a potential strategy to try and lock in some profits and still give you a chance a look on the upside. What would you do? What would your trade setup be?
This is interesting. So what I would do when I first look at and we're looking at options AI. Can you see the screen?
Yep, I'll pull it up.
Okay.
There we go.
Sorry, I was screen sharing. So sorry, so what I would be looking for in NVIDIA is the past couple of earnings events, first of all, is one of the first things I would look at. And so right now, the expected move in NVIDIA is 11%. You can see that right here. The prior 4 earnings events, the last 2, actually, it hasn't moved much at all. But then you see this 25%. It was up 25% 3 earnings events ago. And then it was up 14% the earnings event before that. So now we're looking at this crazy chart, right? And what we're doing is I'm hovering over that current expected move, which is 11%. You can see on the chart where that kind of takes you. It doesn't take you, obviously, that's nothing to the upside considering how the stock's been acting. And then to the downside, it's barely down. You would basically need right now the options are pricing the downside to, 650 essentially, right? Which doesn't seem like that big of a move. If this, this is a real stock, they could miss earnings. People could sour on it. The whole market could reverse and take all these names down. So to Joel's point, it's like if you're going out in the options market, and let's say you're going out to, let's just use May. So May, the expected move is about 18%. So call it a 20% potential move the options are pricing. That seems kind of cheap to me. If NVIDIA did come back and reverse lower, I think I would expect it to be more than 15 to 20%. It could be like 25 to 40% if the whole market reversed and tanked, or if all of these stocks ran out of gas and reversed. So in that case, what you're looking for is you're kind of looking for, if you're protecting an NVIDIA position, there's a, you could do a put spread out in May, and that would be, let's go out. And I'm just, You could go out to May and do a put spread. We're looking at a put, and you can see how expensive that is. But you can turn that into a put spread. You can turn that into a put spread, save a little money. And so this is taking you down to about that 20% level, right? And so you're essentially saying, you know, I'm willing to spend $5,000 to potentially protect 8. What I would be doing here, if I was long NVIDIA, is I would say, listen, I don't want to spend a ton of money. You can lose a lot of money protecting. So I'd be taking this entire trade down out of the money. And I'd probably be starting it down closer to where, you know, like down 15, down 10% or something, where it kicks in. Like I'd be willing to give up my 10% to start this trade. And then what I would be wanting to do is like sort of disaster protection. And I guess it's sort of where can you live with an NVIDIA reversal? And it's probably, you know, you're used to seeing 10, 20 point swings. So now, you know, we've taken it down to that level where it sort of kicks in more of like where the expected move is. And then you get that protection of things getting really ugly. And I think that's the way I would think of it. And I'm sorry, when I'm screen sharing, this is like really slow.
No, that's okay. What I think the most important thing that, I mean, you look at the different strikes and everything, but CC said May. Okay, this is February. A lot of things can happen between February and May, okay, with the markets as well. And I just think that's one thing, and I know that's, you know, some of the mistakes that I've made in the options market is just not giving yourself enough time, you know,
Exactly.
you know, being you know, working against like look at a prime example here with AB and traded the AMAT today, right?
Yep.
He, you know, he bought a 215 call. He was looking
Yep.
pretty good, right? Before, you know, the print. Now, you know, now it's going to have a lot of people that have the 200 calls are out there selling the stock against it. So, no, great commentary, and I hope people took something away from that. Before we let you go, just talk, you know, options expiration. We talk about pins. I mean, this has just been a strong, volatile week. Just looking forward, maybe looking at the S&Ps here or the SPY. I know it's a much different market than the IWM. Do you see a pin anywhere, or you know, what's your expectation going back shorter term today?
Joel, where are we right now, pre-market in the futures?
The SPY's at 501. 501.07. You know, 500 pin there. Go ahead.
Yeah, I think it's very, very possible. I mean, obviously with the PPI, the muted PPI print is a little weird. I think Dennis was
CC, just to correct you, it is not muted at all. You know what's funny? It's the S&P.
What happened? Yeah.
No. It's the S&P is so diversified. It's all tech. And the tech is holding up. And the IWM is crushed. IWM just lost $3. We just lost 1.5% on the IWM. It's like the tale of two markets here. And the S&P is so diversified that it just sits here and it's muted all the time. Qs are green on the day. So you think, oh, you're looking at tech. You're like, they don't care about this. But the broad market cares big time. Banks just lost 1%. You know, you've got utilities are getting hammered here now. Square and all the Cathy stocks are starting to get hit because those are smaller companies that borrow money. So it's like the tale of two markets. Stocks that borrow money hate this print. Stocks that don't borrow money don't care. And the S&P is just heavily weighted with a lot of really strong companies, obviously all profitable, that don't need lower rates as quickly. And that's why you see the muted response in the S&P. So just to clarify, it's a muted response in the S&P, but definitely not in this broad market. Like we were flat on the IWM coming in the number. It's down 1.43%. IWM had one of its best days of the year yesterday. It's giving it all back right now. So there is definitely a response, but it's the separation that's so interesting.
And it is interesting because I think that's exactly right. Is, you know, if you're in NVIDIA, do you really care about this number, right? And then, you know, going to Joel's question, it's like, and that 5,000 thing is probably playing a factor too. And it'd be interesting to see if the CPI and this PPI, which is like this 1-2 punch of, well, I mean, we know now. I mean, when's the Fed's not going to lower rates for forever now, like 6 months, right? Like at least. And if they do, it's probably because things like retail sales and stuff starts looking uglier. So that what's interesting is if this had happened next week, would the reaction have been even, uglier in IWM? Would we have seen it carry through into some of these other major indices? So I think that, to Joel's question about the 5,000, it is going to act like a magnet today. That doesn't mean it's going to exactly pin, but it's acting somewhat as a liquidity, right? There's liquidity today that is going to be missing on Monday and Tuesday. So I'm sorry, we don't trade Monday, but on Tuesday and Wednesday.
Interesting.
That's the other thing is the 3-day weekend, right? That could be interesting. You get a lot of
More of the
people a lot of time
premium
to think about things.
Yeah.
Yep.
More of the premium getting
Yep.
sucked out of those options. Okay, CC, another excellent segment here. CC Lagator, he's the founder of Options AI, guiding us through this options market. I really appreciate your straightforward approach, and we'll be dialing you up. Maybe we'll dial. I don't know. This may send you an invitation for the Quad Witch coming up on that third Friday in
do it.
March. Thanks, CC.
All righty,
It's
guys.
the kind of market right now that NVIDIA wants. It wants hot numbers, and look at NVIDIA taking off to the highs of the day here, Joel.
Good
So
point.
the separation here, so please understand the separation. Chad, if you can learn anything from this show, this market is all about rotation. It is what has been driving this market forever, keeping it elevated, keeping the S&P somewhat muted. I mean, we can even look at the S&P throughout the year and you're like, well, it's been pretty good, but we're not like we're blasting off because we haven't had the buy everything market. Yesterday was a little bit but it wasn't yesterday either because NVIDIA was down yesterday. Apple was down yesterday. It's tech versus the IWM. The S&P is full of both, obviously still heavily weighted tech, so it holds up better. But it's just, so incredible that, on this hot number, they're actually going to come in and it means buy NVIDIA. And that's, what we're seeing here. I think NVIDIA is going to break out to new all-time highs here today. We've got the upgrade, or we've got the buy rating from Loop, which was a little bit of a catalyst. But now even with this number, you'd think, oh, well, here's going to be the SMCI bubble is going to burst. No, this isn't going to burst the SMCI bubble. The SMCI bubble is going to burst. It's just, it's just gotten to a ridiculous level. It will burst eventually, but it isn't going to be PPI that bursts the SMCI bubble. It's up 73 points here right now. It's going to its highs of the day here too. Everybody's hiding out in tech stocks because they're worried rates are going to be higher for longer.
I mean, I just brought up the breakdown of the S&P. I mean, right there, Apple and Microsoft, 14%. The double goog makes it above NVIDIA. So
Green,
NVIDIA's
Google,
been tailing.
Microsoft, green. Apple,
Yeah.
which is actually just hated, so it's going back down. Tesla, green. Netflix, green. There is just a lot of, QQQ. It's honestly kind of funny that the QQQ is not up more. I mean, 0.144% here on the QQQ doesn't feel like it's even up enough. So, with S&P is only down 0.12 and IWM is bouncing back to a certain extent. Now, keep this in mind, folks. The last time we got a hot number, the IWM dip was bought. There are money managers that are just going to buy stocks. So I don't think this is Katie bar the door, IWM's going back down to the close. I think you're looking at the dip to buy here on everything. So I think you're looking at, that's what worked 3 days ago. And can we give that number again? We know we say it's hot. Let's give the PPI number here again. How hot? Because the action in the IWM was so incredible. I wasn't looking, at the numbers itself. How hot was the number?
So year over year, PPI came in at 0.9%, 0.9 versus 0.6 estimate. The core PPI for January. So Dennis, it was 1.8 in December. It was expected to drop 0.2% to 1.6 in January. Instead, it went up 0.2% to a flat 2%. So we were expecting a slight drop from December to January. Instead, it went higher. So just kind of way off on the expectations there, I guess, from the street. But yeah, I mean, my thing with it though is a lot of the bear case, at least going into the year, was that we were going to be in a recession or start seeing the signs of a recession. But this is saying the opposite. I mean, seeing inflation stick around shows you the economy is still running hot. We've gotten hot labor data.
We've had such a run of good data too. I mean, just month after month after month of pretty benign data. But we missed 2 earnings report. Pablo let's do 2 more. Wrap it up
TTD.
for this Friday. Let's go at the trade desk because I got a good level for them, and then
All
let's
right.
do Roku and let's call it a day.
All right, so the trade desk reported a non-GAAP EPS of 41 cents, missed by 2 cents, revenue of 606 million, beat by 23 million. They gave some strong outlook, and the stock's up 18%. So again, the numbers themselves weren't great, but they must have given some strong guidance. Oh, they also announced a share repurchase program of $700 million. Let me see if I can get some more
Let me
clarity
do
on the
quick
guidance.
technical on this. If you got any more detail, Pablo, big spike out there, 93.65. You backed off $5 since that, so you got to be thinking, if you wanted to sell over 92, you may not get another opportunity. But what's more important to me, you know what I'm going to say here? I'm going to go to the monthlies. 2 months in a row, you had highs between 90.67 and 91.85. So $91. I'd see what happens here. That is a big level for it. Where to buy this thing, I have absolutely no idea, but I can't identify resistance there at 91. I'd even give it a 3-star. S&P's 12 handles off that low. The bounce, I'm not sure. I
Buy
wonder
the
how
dippers are going to come in.
they
That's what
already
there's
did.
so many money managers that are sitting with so much cash waiting for the recession, and they're in trouble. They're worried about their jobs. They're coming in. They came in last week. It's blindly buy the dip win money market right now. I don't know when that changes, and it can change, folks, and it can change in a hurry. And that's why continue to listen to the show, because I know somebody will say, "Oh, you said this," and then 2 months from now, we'll sell off significantly or whatever, and they'll say, "Well, Dennis said it was going up." You know, they always just write down just to bring back a quote from 2 months ago to try to call me wrong. But I mean, we're in this market here where buy the dip is just winning, and it's winning not just a little bit; it's winning big time. So buy the dip blindly is winning right now. I don't know when it changes, but right now it's working.
All right. When the other one we did not hit was Roku. Roku reported after the close yesterday. I didn't really, I don't know. I got to go through this report a little bit more, but said the numbers look okay. EPS came in at 55 cents. Sales came in at 984 million, beat the $966 million estimate. Roku expects Q1 total net revenue of 850 million versus 833 million. So again, I mean, the numbers looked strong overall. Let's see if they gave any like bad warnings or something, because this thing got absolutely hammered after the report. A strong, yes, revenue beat, strong guidance. I have no clue. Well, I guess they didn't like it.
They love some stocks and they hate others.
I will just say this thing is kind of in no man's land here. This is where we're trading. So we had a big gap up after the last earnings. We've come down. I don't know. If you want to hold out for that gap low, that's way down at 69.18. But you have a little bit minor step down seller here. I don't know if you will get to that level. Current pre-market low, that comes in at 76.05. So the longer that can hold up, more the chance you get some of these losses back. So S&Ps are battling back. Let's see the IWM. I'm going to start doing those both. IWM, that bounced a buck off its low. So the fact that we've got to bounce off the lows, those pre-market lows, do have some significance in today's session. Monday, we're off, right? So everyone enjoy your day off. And on Tuesday, T3 Tuesday, I believe we're going to get Red Dog back on to help us make some sense out of this price action from this week.
Yes, sir. We will get Scott Redler back on Tuesday. Make sure to be there. Hope everyone enjoys the long weekend. Today's going to be an exciting day, I think, with that options expiration. And,
Wild,
you know,
man.
so, all right, guys, till then, stay green. Have a good weekend, y'all.